Okay. Welcome everyone. Welcome to the Glory Pip Academy, where we make Forex simple, understandable, and real for everyone. In this video, we will introduce you to a powerful financial word that you probably use every day without realizing it: the foreign exchange market, also known as Forex. Okay. So, what is Forex? Forex is short for foreign exchange. It's the global marketplace for buying and selling currencies. Unlike the stock market, which deals with the shares of companies, Forex trading is all about currencies like US dollars, euro, Japanese yen, and many others. You have technically participated in Forex if you have ever traveled and exchanged currencies, and also you shopped online from a different country, and also sent or received money across borders. Simple example, let's say you are traveling from United States to Europe. Before your trip, you go to currency exchange and you buy euros with your US dollars. At that time, let's say the exchange rate is €1 is equal to 1.1 USD. Okay, so you exchange $1,100 and receive 1,000 euros. After your trip, you will still have, if you still have your 1,000 euros and you decided to convert them back to USD, let's say now the exchange rate has changed and €1 is equal to 1.15 USD. So when you exchange your 1,000 euros, you will now receive 1,150 USD. So you gain this extra 50 because of the value of the euro increased while you held it. So that's exactly what happens in Forex trading. But instead of exchanging money at a counter, traders do this online to profit from a small price movement, whether the currency goes up or down. But as a trader, you can take advantage of currency price movements to earn profit without even owing any physical money. So, why Forex is the largest market in the world? Every day, governments, banks, businesses, and individual traders like us, they trade currencies, pushing the daily turnover of the Forex market to over $6.5 trillion. That's larger than the stock market, crypto, and commodity markets combined. How does this $6.5 trillion daily Forex volume happen? The Forex market the Forex market isn't run by one person or one company. It's made up of millions of participants around the world. All exchanging currencies are or all are exchanging currencies for different reasons. Let's say central banks. Central banks, they like governments trade large amount of currency to manage inflation, stabilize their economies, or control interest rates. As an example, let's say US Federal Reserve might sell USD and buy euro to weaken the dollar when exports are too expensive. Or let's talk about commercial banks and financial institutions. Banks handle huge currency exchange every day for their clients, businesses, importers, exporters, and also investors. A global company company like Apple might exchange billions of US dollars to pay its supplier in Japan. And also corporations and international businesses that operate globally constantly exchange currencies for payroll, product purchases, and also global transactions. As an example, let's say a European airline buying fuel in USD will need to euro to will need to convert a euro to USD daily. Okay. So, and also we can talk about hedge funds and international investment firms. There are large-scale professional traders who make speculative trades, often placing massive orders in forex market. As an example, a hedge fund might short the British pound based on political news or economic forecasts. And also retail traders, people like you and me. Millions of individuals trade online through brokers aiming to profit from small price changes. As an example, let's say a trader buys Euro USD expecting the euro to rise. Even a small $100 trade adds to that $6.5 trillion worth. All of these combined, like big banks, governments, businesses, and individual traders, contribute to this daily 6.5 trillion in global currency transaction. Sorry, in USD. Okay, so this is what makes the forex most active and liquid market in the world. So let's quickly look at the history of forex. The modern forex market didn't always exist the way it does today. Okay. Until the 1970s, most currency exchange was tightly controlled by governments and central banks. But when currencies begin to allow currencies to float freely, meaning their value changed based on supply and demand, then Forex opened up. At first, only the big players, as I mentioned earlier, central banks, hedge funds, multinational banks could access the market. But now, with the rise of internet and online brokers, anyone, even with $50, can learn to trade currencies like a pro. So, why people choose to trade Forex? Okay, why should you even consider trading Forex? Here are some of the top reasons people around the world are learning Forex today. Okay, you can earn in both directions with Forex. In Forex, let's say you believe the euro will rise against the US dollar. You can buy euro and USD, and when the price goes up, you profit. But if you think euro will fall instead, you sell euro USD, and if the price actually drops, you will profit. Okay? And also, you can start with the demo account to practice with risk free. Unlike most businesses or investments, Forex lets you practice for free using virtual money in a demo account. This means you can build confidence before risking the real money. Also, we have this most important point about leverage. Leverage lets you control large trades with a small capital. All these technical words, we will discuss with more details in our future videos. So for now, let me tell you, leverage allows you to trade large amounts without needing the full amount in your account. It magnifies your buying power, but also, yes, of course, your risks. As an example, let's say you can control a $10,000 trade using just $100 from your account. Okay, we will discuss these strategies, how these leverage work, and everything in the future. And also, in Forex, you don't need a big investment to get started. In Forex, you can start trading with a little as $50 to $100, depending on the brokers. You don't need to invest thousands of dollars upfront, like real estate or stocks. Okay, and also Forex is a highly liquid market. You can enter or exit trade instantly. Forex is the most liquid market, as I mentioned earlier. Over $6.5 trillion is traded every day. This means that when you want to buy or sell currency, you can do it immediately. No waiting, no delays. You can anytime you can open or close a trade. Okay, simply. But remember, with the potential for profit also comes with this risk. That's why the education and mentorship matters. Then let's talk about who trade forex. We discussed these earlier. I mentioned all these things earlier. Let's talk about this forex market. Forex market is powered by millions of participants. As I mentioned earlier, central banks like U.S. Federal Reserve or ECB, and large commercial banks and investment funds and hedge funds, and also wealth managers and financial consultants, and also individual traders, including you and me, retail traders. Okay. Let's be honest, most ways of making money take a longer time. Saving your salary, waiting for a promotion, it can feel slow, but Forex give you a different option. It's one of the few ways where if you learn the skill properly, you can start seeing result in a shorter period of time, sometimes in days or even hours. You don't need a big investment, you just need the right support. And that's what we give at Global People Academy. So, if you are looking for a faster way to grow your income and take control of your future, this is your chance. Let's get started together.